The latest inflation figures are just out and they're being closely watched to see whether an interest rate cut is likely next week. They'll be a big factor in the Reserve Bank's board meeting when it gathers for its rates decision on Melbourne Cup Day. So now to the numbers, and the Consumer Price Index has come in at an annual headline rate of 3.5%. That's 0.6% for the September quarter. So will that be enough to prompt a rate cut? Rob Henderson is the chief economist at NAB Capital. Rob Henderson, what are the numbers telling you?
Hi Nicole, look, the underlying rate is the most important thing for the Reserve Bank, and that actually came in at only 0.3%, well below expectations, which were for a rise of 0.6. So really that's provided the Reserve Bank now with plenty of room to support the economy with a cut in interest rates, and we think now that there will be a 25 basis points cut in November.
So where exactly are we seeing price rises, and on the flip side, what's coming down?
Well, it's pretty interesting. There was widespread drops or low or small increases, low price rises for the services sector, Nicole. For example, the education sector had a rise of just 0.1 in the quarter, communications was flat, and health services costs actually fell by 1%, so that's a pretty big fall. And importantly, food and non-alcoholic beverages fell by 0.2. Now, that's a pretty core item, of course, in the consumer's basket, so that's got a fairly high weight, and there was actually a 0.2% fall there.
You mentioned that you're tipping a rate cut next week, but what's the outlook for the rest of the year in your view?
Look, we think the economy's still running along at about a trend rate of growth of around 3%, but the fact of the matter is that a number of sectors, and I guess the three key ones are retailing, manufacturing and housing construction, they've all been pretty weak and would be supported by a cut in interest rates at the moment. And given the international uncertainty, the lack of confidence globally, we think the Reserve Bank, given that now the inflation outlook is pretty good for at least the next 12 months, has got some room to support the economy. That's why we think they'll cut interest rates in November. It is possible they'll follow through again with another one in December, or maybe that'll be delayed for a while. And I guess, you know, the whole thing is dependent on the outlook down the track. But it looks like we're going to get one in November anyway, Nicole.
Rob Henderson, thanks for joining us.
That's my pleasure.